when uncertainty is introduced into the markets, gold seems to be at least one of those asset classes that investors are interested in attaching themselves to or buying more. You've actually built a model that is linked to the USM2. And for those of you that don't know, the USM2 is essentially a broad way to measure the total money supply in the economy, or in the US economy. Is that fair to say?
That's exactly fair to say. So what years ago, if you think about it, I built a model to understand the valuation of gold, and this is the tricky thing, right? Over the last 50 some odd years, gold has always gone back to the fair value as measured by M2. And so a few years ago, say 3-4 years ago, gold was significantly undervalued relative to M2. We had the massive increase in cash in circulation post COVID through the payroll protection plan, through Trump's checks that he was sending out to people. That was all money that didn't exist prior to 2019, and so it was inevitable that gold would eventually catch up. All right, so fast forward to where we are today. Gold is caught up. In fact, gold is at the top end of its fair value range. So it's not, you can never just be on the fair value line. You got to have a range to it. And so it's trading at the top end of it. Does that mean that the run in gold is done? No, because we know the US continues to print more money and money supply continues to increase. They continue to run a deficit of 7%. And it is a little bit of the theory of like this debasement of the US dollar.